Hi, this is JC Parets with Eagle Bay Capital. Today is Tuesday, March 25th, and we're going to talk about Treasury bonds. The first chart that we're looking at is shares of TLT, which is the United States Treasury Bonds Exchange Traded Fund, and this $109 level has been a big one since last July. This is now the fifth or sixth attempt to break through these levels, and as we always say, the more times that a level is tested, the higher the likelihood that it breaks. Why? Because every time we get up to these levels, there are sellers. Eventually, anyone willing to sell at these prices will have already sold. And that's when we know that demand exceeds supply. And that's when we see the breakout. What I would love to see is for us to walk in one of these mornings, see a gap higher in the TLT above those levels. That's what we call a breakaway gap. And that would probably be the most bullish outcome. Now, what's going to be the catalyst to take Treasury bonds higher? I think it was the false breakdown at the end of December. From false moves come really fast ones in the opposite directions, and they tend to last longer than most people expect. So I think that's exactly what we're going to see in shares of the TLT. From a price target perspective, here's the next chart. We're looking at about $115 to $116 a share. This is based on three things. First of all, the size of the base that we've seen since July. This big W bottom, this double bottom, rounding bottom, call it what you want. The size of this base takes us to about 116. Also, the entire decline from last year in 2013, the 61.8% Fibonacci retracement of that decline takes us right to 116, 115 and a half or so. And this was also big time support at the beginning of last year. So we have three reasons why we're targeting this level. And you can see it all in this chart. Now, from a risk management standpoint, we're looking at about that 105 and a half level. If prices start breaking below that, we know we're wrong. This has been support for the last 6 weeks or so, and we definitely want to make sure that we stay above that. The last chart that we're looking at is the 10-year yield, United States interest rates. And we have a target of about 2.45, which has been support over the last year. That's the initial target. From a risk management standpoint, if we start breaking above 2.84 or so, I would start to question the bearish thesis for interest rates, which also coincides with a bullish thesis in United States Treasury bonds. So once again, my name is JC Parets. We like Treasury bonds right here. We think interest rates go lower. Make sure to follow the blog allstarcharts.com. Follow us on StockTwits and Twitter at allstarcharts, and make sure to see our Tumblr page allstarcharts.tumblr.com.